Welcome to the Cashflow Matters presentation by Milestone Financial Services. I'm Darren Lordenbar and I'm excited to present this workshop. Cashflow Matters is an essential step to your pathway to financial peace and freedom. Effective cashflow management is key for financial success. It's not optional. No matter how much money we have or what stage of life we're at, we all need to make decisions about how we spend our hard-earned cash each and every day. Some of these are small, like your morning cup of coffee or buying a t-shirt. Others are much bigger, like a new car or a house or setting up an investment portfolio. All of these decisions, big and small, highlight the importance of managing your cash flow. Cash flow management is a key component of a successful investment strategy. Getting the basics right can help you reach your financial goals more quickly. There is no benefit in having an outstanding investment program if the credit card is blowing out every month. Cash flow management is the key element in being able to determine with any kind of certainty how far financial freedom is away. Interestingly, the level of your income is not a determining factor of financial success. In the best-selling book, The Millionaire Next Door, it is discovered that most self-made millionaires actually spend between 2 and 3 hours per month managing their money. How much time are you currently investing on managing your cash flow? If you were like most people, you spend around 40 hours per week earning it. Shouldn't we have some real time put aside in telling our money where to go? Let's start by looking at what cash flow really is and why it matters. Most Australians are not accumulating enough wealth to be able to be self-sufficient. It is estimated in a recent study by the OECD that 95% of Australians will be living below the poverty line. How does that feel? This is an affluent country. Talk is cheap. We need to take action and be part of the 5%. Early wins now will make a huge difference. What is the right formula? Well, this is what the 95% do. 95% earn, spend, and then save. Clearly, this is not working. The 5% who are the successful ones earn, save by making it a bill, and then spend the balance. This is the best way to go. So what's your formula? Do you need to make some changes? Like anything new we learn, often it takes a little effort and time. It is worth persisting. If you are serious about financial peace and freedom, then you should, you can, and you must persist. It is beneficial to get into a business-type mindset. If you were the chief financial officer of a large company and you managed the company's finances like you manage your personal finances, would you keep your job? Isn't our personal finances far more important? As we can see in the diagram, assets drive up income. However, liabilities, such as credit cards, mortgages, car loans and leases, drive up your expenses. What's needed is an increase of assets to produce more income and a reduction of liabilities to reduce expenses. This will compound and provide more free cash flow to invest in assets, providing even more income, producing an ever upward spiral of benefits. Consider this. Is your home, your primary residence, an asset or a liability? Technically, it's a liability. However, many would consider it's a better option than renting. Also, with intelligent investment decisions, it can be used to leverage into assets. Okay, now let's look at the benefits of running such a system. Firstly, you'll gain more control, ensuring you control your money rather than the other way around. Financial peace, knowing that you can spend without guilt or getting into trouble down the track. It's about deliberate management rather than being a victim. It makes tax time easy. You'll never miss out on a tax deduction, and you can provide your tax advisor with reports, saving you heaps of time and saving you in accounting fees. Over time, it drives up passive income from assets and drive down expenses, which brings about financial freedom faster. Over time, you'll naturally make better decisions about how to use your money. For example, if you were to find an investment property that would only cost you around $50 per week to own, could you afford it? How do you really know? With complete confidence. You can ensure that you pay yourself first, your savings, and then pay everyone else after. Making your savings a priority, or a bill, has proven to be the most successful way of saving. Other ancillary benefits is it's easy to search for warranty receipts, etc. if you need to make a claim, as the software will allow searches, and hard copies of receipts are filed in reverse date order in well-organised files. Financial peace can come well before financial freedom. It's all about control and gaining certainty. Based on research, it's clear that it's irrelevant how much a person earns. It's how much they get to keep and send forward that matters. Therefore, a plan must be in place. In our experience, the best plan has the following elements. A spending plan or budget. This is a system and a plan of action where you tell your money where to go rather than just watching it do its own thing and wondering where it went. A system for recording all transactions as they actually occur, preferably specialist software such as Xero, MYOB or Quicken. We've found that in the long run spreadsheets don't work, as over time they are not relational and therefore it's more difficult to produce the necessary reports. Periodically, checking the budget versus actual and making adjustments accordingly, either adjusting the budget or adjusting spending. This is an overview of the recommended system, which includes the 30-day spending challenge, the purchasing of equipment and software, setting up or modifying existing bank accounts to have in place practical mechanisms for daily success. We call it mechanical discipline. After you've recorded 3 months of income and expenses, then you can more simply set a budget based on the data recorded. This way it becomes more realistic. And finally, it is essential to periodically review the budget versus actual reports. This is a system that should be used for life. Step 1 is start recording all spending from any source, such as your credit card, bank account, etc., for a period of 30 days. To help you do this, consider using the notes sections of your smartphone or programs such as Easy Expense, which are available from the Apple Store, or simply use a small notepad that you can carry with you. This first step requires a little discipline, however, it's well worth the effort. After 30 days is complete, collate and sort this spending into 2 key categories, being essential and discretionary spending. Items that would fall into essential spending would include mortgage payments, rates, school fees, etc. Discretionary spending items would include items that you have some discretion with, such as coffee, snacks, even groceries, as this is an expense that you do have some control over. Now carefully review all your spending to see if anything is standing out. Are there some items that you spent more than you thought? We regularly receive feedback from clients that they felt that this was an incredibly important exercise that's driven real and measurable change in their spending habits. Information in cash flow management is truly empowering. If you're a couple or you're in a relationship, do this together. It's really important to discuss the outcomes. This is not to be done in a critical way, as it doesn't provide the positive outcomes we're seeking. Rather, it's to be done in an open and honest way, so that the appropriate agreeable changes can be made with sober judgment. You might find there's some wasteful and regretful spending happening that's not making life more enjoyable. If that's true for you, then reduce or eliminate. So this is your first and essential step in the journey to cash flow mastery. As you can no doubt see, this system is very practical. The next step involves the purchase of some lever arch type files, a hole punch, and 2 filing trays. Set up your trays and label them receipts and upcoming bills. From now on, keep all the receipts from all spending and put these receipts in tray 1. Easy, right? Also, place bank and credit card statements into the receipts tray as well, ready for reconciliation. Step 3 is purchase software. This is going to make the job easier. The good news is that this purchase is tax deductible. Go online or to your nearest software retailer and purchase money management software such as Quicken, MYOB. These are excellent products. At this stage, only the home-based accounting versions are necessary. Alternatively, go online to www.xero.com/personal. This is the very latest cloud-based software and will work on any computer, smartphone or tablet that has internet access. This will cost approximately $49 per year. Next, you need to set up your software with the various bank account and credit card accounts that you have. A good starting position is to grab your latest statement and add in the transactions from that statement, including the opening balance. Now you are set up and running. Over time, as you get more proficient with your newfound cash flow skills, you can include your mortgage, your home value, superannuation, investments and other assets. Next, set up income and expense categories. Most good software will have pre-populated categories ready to go. Feel free to add to these to personalise your reporting and tracking your particular situation. Categories are important so that you can get good quality consolidated reporting. For example, you might purchase groceries from Woolworths, Aldi and Coles. These transactions are all to be categorised as groceries as shown in the example. Start entering all income and spending into the software based on the source documents, being the receipts or bank statements. File the receipts in the lever arch file that you purchased as they are entered, which will result in them being in reverse date order. We have found this to be much faster and easier than trying to file in categories. Place any bills that you receive into the second tray ready for payment. Enter the payment date of the bill into the reminder section of the software and pay these bills when due. Once paid, file the bill in the lever arch file in the order they are entered. We also recommend that, for example, when you take some cash out of an ATM, that you keep the ATM receipt and put this in tray 1. We don't recommend that you keep a receipt for all the small transactions you spend that cash on, otherwise the system may become complicated and cumbersome. Use the help function in the software to learn how to reconcile the transactions to the bank statement. This makes sure your transactions marry up with your bank statements and is a double check that your data is accurate. Step 4 is getting your bank account set up for mechanical discipline I spoke about earlier. We want a system to work for us and make it as easy as possible to stick to. 3 accounts are generally required. First, wages get put into your transactional expenses account. This is the account that your non-discretionary expenses are to be paid from, such as your mortgage rates, electricity, etc. From the budgeting step, you will now be able to clearly identify what expenses are discretionary and what are non-discretionary. Add up the non-discretionary expenses, and this is the amount of money that must remain in a transactional expense account to pay these bills when due. The balance is transferred to the discretionary spending account. As you have budgeted all non-discretionary expenses, then you can be confident that the balance that is being swept into the discretionary spending account can be spent freely without guilt or problems, as you have all your long-term savings needs covered too. Beware, however, if these funds run out before the next pay period, then don't be tempted to draw funds from other accounts. Remember, if we want to be in the top 5% of Australians that are successful, then we need to have savings the top priority in our budgets. Discretionary funds can be accessed by an ATM or Visa debit cards. We recommend as soon as possible you cut up your credit cards and replace them with Visa debit, as this eliminates the need for credit cards and ensures you are spending your own money. From there, amounts get paid into your investment or mortgage offset account as savings for the future needs and emergency funds. It is important to set some goals and then use this account structure to ensure that these goals are realised. For example, if you wanted to take a holiday in 12 months' time and you estimated this holiday would cost $3,000, then you need to set aside in your investment or mortgage account an amount of $250 per month. This can be set up as an automatic sweep from your transaction account. The best types of accounts for these savings is a high-interest online savings account, or even better still, mortgage offset account, if you still have a mortgage. Now you have some history in your software. Use this to create a budget by reviewing the profit and loss reports, which will show you your income and expenses for the time period reported. Setting a budget is now easy as you have identified all income and spending for 3 months, being a quarter of 1 year. This is typically a long enough period to be able to gain enough understanding to set an annual budget. Most quality software programs will allow you to set a budget in the software, and it makes it really simple to print these reports periodically. Once you have a budget in place and entered into your software, set a periodic reminder in your diary to do a budget versus actual reporting. This should simply be a matter of a click of a few buttons in your software to produce a report. Nice and easy. You may wish to send your Milestone financial planner a copy of this too, as this will help us serve you even more. Adjust your budget and/or spending accordingly over time, with the overall focus being to increase your income and drive your expenses down, so that you have even more to send forward, getting your money working for you so eventually you don't have to work for money. Now that you're a good money manager, don't give up. Be determined to continue to do this over the long term. For those who are a little more time poor, another option is to have a bookkeeper to facilitate the data entry for you. If this option is employed, simply have the bookkeeper provide you with a budget versus actual report on a periodic basis. Initially, Milestone recommends that you review these reports monthly. As you master your cash flow, then you can actually extend this reporting period to, say, quarterly. Anything longer than quarterly is not recommended. Milestone would be pleased to recommend a suitable bookkeeper to you. Simply contact your Milestone planner. Step 6 is automate as much as possible. A good way to ensure success is to take decisions out of the process and automate where you possibly can. Having wages paid to the expense account and then payments made by direct debit from this account means little time or effort on your part. Continue to refine the system to make it work for you, and stick with it until you master it. Are you up for a challenge? You can take your first step now and register at our website. Go to the front page of our website, scroll down to the bottom and click on the 30-Day Spending Challenge logo. This will take you to the 30-Day Spending Challenge page and simply register your details there. Why should you do that? Because we don't want to deal with theory, we want to deal with the truth. Start your challenge today. There are more tools and resources available by contacting Milestone or visiting our website. I trust this presentation will be one that you will remember as a pivotal educational experience, being the foundation for your lifestyle by design and financial freedom. Thank you for listening to this presentation. This has been your first step to financial success. Now go take action.